We talk a lot about international trade, right?
Here.
GDP, trade deficits, all that stuff. But it's usually kind of in these big abstract terms.
Yeah.
But it's interesting to think about like how those high-level decisions, the kind of stuff that happens in government and these big organizations,
Hmm.
how that actually ripples out and touches you and me, like on an individual level.
Right, right.
And like a perfect example of that, I think, is, those tariffs that the Trump administration put in place a few years back,
Yeah.
and then how other countries responded to those.
Yeah,
Like
definitely.
it might feel like kind of old news at this point,
Right.
but the impacts of that whole situation are still being felt today in some pretty surprising ways, I think.
Yeah, no, it's totally fascinating to see how these policy shifts set off these chain reactions across the whole global economic system.
Absolutely.
Like something that seems like just a localized trade dispute can actually have these ripple effects that are way more broad and unexpected than you might think.
Yeah, exactly. And that's what we're going to like really zoom in on in this deep dive today.
Okay, cool.
So we're going to unpack specifically those Trump era tariffs and especially how India responded with their own reciprocal tariffs.
Okay.
And like our mission here is to figure out what happened, understand like the key takeaways, and then most importantly, see how this global trade reshuffling, like how does it actually affect you, like the world around us.
Makes sense.
So to do that, we've got a bunch of different sources. We're going to look at, we have some news analysis, some official statements from the Reserve Bank of India, and then some commentary from different experts
Yeah, sounds good.
to really try and get a clear picture of all this.
Yeah, and I think as we go through this, you'll see that these tariffs weren't just like isolated incidents. They kind of mark this turning point in how a lot of countries are thinking about international trade.
Totally. And our first big point is this idea that these tariffs represent this pretty big shift away from that whole like
Oh.
globalization, free trade kind of mindset that we've seen for, decades.
Mm.
Like think about it for the past, however many years. The trend has been all about lowering barriers to trade, right?
Right.
Making it easier for goods and services to flow between countries. But now we're seeing some of those barriers going back up.
Yeah, yeah.
And a lot of it is driven by this idea of like, hey, we need to prioritize our own domestic industries first,
Hmm.
you know,
Mm-hmm.
and that's what you hear called protectionism or sometimes economic nationalism.
Yeah, it's a big question about the future of international cooperation, right? Because when these big economies start doing these unilateral actions like imposing tariffs, it puts a lot of strain on the institutions that we've built up, like the World Trade Organization,
Okay.
and their role as like this neutral referee. It gets a lot harder.
Right. It's like changing the rules of the game while everyone's already playing.
Exactly.
And the other thing is these tariffs don't happen in a vacuum.
Right. Right.
So when one country puts tariffs on another, the other country is often going to retaliate with tariffs of their own.
Of course.
And that's exactly what happened here. And you get this tit-for-tat escalation of trade tensions
Yeah.
and the potential for like full-blown trade wars,
Yeah.
which honestly doesn't create a very stable global economic environment.
Well, and it makes countries start looking for different partnerships, right? Like if that traditional kind of multilateral framework is less reliable,
Hmm.
you might see countries like China, the EU, India, ASEAN,
Yeah.
they might start focusing more on building up these stronger regional trade alliances
Right.
to make sure that they have these reliable economic relationships.
It's almost like they're forming these new trade neighborhoods.
Yeah, exactly.
And this also pushes businesses to rethink their whole supply chain, right?
Oh, totally.
Like, where are they getting their products from? Where are they setting up manufacturing? And we've heard a lot about this China plus one strategy.
Yes.
So for anyone who's not familiar with that, that's basically where companies are like, okay, we want to have production in China, but we also want to have production in at least one other country.
Right.
So they're not totally reliant on any single source.
Yep. Diversification.
Exactly.
Spreading the risk.
And this drive for diversification could actually lead to the creation of entirely new economic blocks
Mm-hmm.
and, really shift the balance of economic power over time.
It's like a whole new world order forming.
Yeah, so that's the big picture shift. But let's get into some of the specifics.
Okay.
So one thing that really jumped out at us in our research was how the Trump administration actually calculated those tariffs that they imposed.
Yeah, and there's this interesting discrepancy here between the figures that the Trump administration was putting out and the data that's compiled by the WTO.
Oh, yeah.
So like the US team was saying things like India has tariffs around 52%, China 67%, the EU 39%.
Yeah.
But then when you look at the WTO data, it shows much lower average applied tariffs.
Really?
So India was more like 12%, China closer to 3%, EU around 2.7%.
That's a huge gap.
Yeah.
It makes you wonder about how they got those numbers.
Yeah, and there were these accusations that they were using bad math, essentially.
Mhm. Right.
And critics were saying that they were intentionally trying to inflate those perceived tariffs from other countries to make the U.S. tariffs seem more reasonable in comparison.
Oh, interesting. So it's all about framing.
Yeah, well, and even when you try to account for things like government subsidies, which the U.S. administration was always bringing up,
Yeah.
as a justification for the tariffs, it's still hard to reconcile those numbers.
Yeah.
It suggests that their calculation method was, at the very least, questionable.
Yeah. So with this whole backdrop of a global move towards protectionism
Right.
and some, potentially questionable math behind those tariffs,
Yeah.
let's zero in on the impact on India.
Okay.
So as of April 9th, 2025, India is facing this 26% reciprocal tariff on goods going into the U.S.
Right.
That's a pretty significant increase in the cost of those goods.
Yeah, and just from a purely economic standpoint, the expectation is that you're going to see a decrease in Indian exports to the U.S. Some analyses were projecting a decline of around 6.4% just in 2025 alone. And to put a dollar figure on that, that could mean a loss of roughly $5.76 billion in export revenue for India.
And this wasn't just some theoretical thing.
Right.
The Reserve Bank of India actually factored this into their economic forecasts. And they lowered their projection for India's GDP growth by 0.2 percentage points, bringing it down to 6.5%.
Okay.
And they specifically called out this uncertainty in global trade, fueled in part by these tariffs, as a reason for that downward revision.
And it's interesting to look at what the RBI governor was saying, because he expressed this concern that these trade frictions might actually have a bigger negative impact on India's growth than they would on inflation.
Right.
Which just shows you the potential drag on overall economic activity.
Yeah, it's about hindering that potential for growth.
Exactly.
So let's look at how these tariffs are playing out in different sectors within India.
Okay.
Because it's not just a uniform picture of doom and gloom.
Right.
There's some interesting variations depending on the industry.
Yeah, and that's a crucial point to understand. There are going to be sectors that face headwinds, but there might be others that actually discover some advantages in this new trade landscape. Let's start with textiles and apparel.
Okay.
Surprisingly, India might actually see a positive impact here.
Wait a minute. How could tariffs be good for India's textile industry? I thought tariffs generally make things more expensive.
Right. But it's all about the relative tariff burden.
Okay.
So while India now has that 26% tariff on textile exports to the U.S., some of its competitors like Vietnam, Bangladesh, and China are facing even higher rates.
Right.
Vietnam is at 46%, Bangladesh 37%, China 34%.
Oh, wow.
So this difference could actually make Indian textiles comparatively more attractive in the U.S. market
Right.
and potentially lead to U.S. buyers shifting their sourcing.
So it's all about the comparison.
Exactly.
Okay, so one potential winner there. What about pharmaceuticals? India is a huge player in the generic drug market globally.
Yeah, and this is one where the outlook is a little more uncertain and potentially negative in the long run. So the U.S. is India's biggest market for pharmaceutical exports.
Right, billions of dollars a year.
Exactly. And while those initial reciprocal tariffs didn't directly target pharmaceuticals,
Right.
there were hints from the Trump administration that they might consider adding tariffs on pharmaceuticals later on.
Oh.
And that could have a huge impact on the major Indian drug manufacturers.
Yeah, for sure. Companies like Dr. Reddy's, Aurobindo, Pharma,
Yeah.
they get a big chunk of their revenue from the U.S.
Right, so any tariffs there would really hit them hard.
Okay, so kind of a wait-and-see situation for pharma. What about agriculture? Specifically seafood and rice.
So for those agricultural products, the picture seems relatively stable.
Okay.
And there might even be a slight competitive edge for India, particularly in shrimp exports.
Okay, interesting.
India seems to have a more favorable tariff situation compared to some other countries that supply those products.
So your shrimp cocktail might not be getting more expensive because of these tariffs.
Right.
And India might even gain a little bit of market share.
Yeah, potentially.
All right, so let's move on to electronics, another big sector in global trade.
So this is where India finds itself in a surprisingly strong position,
Okay.
especially compared to some of the major electronics exporters like China, Vietnam, Thailand. India's tariffs on electronics going into the U.S. are generally lower.
Okay.
So, for example, China faces tariffs as high as 79% on some electronics, Vietnam around 46%,
Wow.
and India's rates are lower, which gives them a real edge.
Okay, so electronics and certain parts of agriculture are looking okay.
Yeah, so far.
But what about some of those more traditional industries like steel and aluminum?
So even though India is not a huge exporter of steel and aluminum directly to the U.S.,
Right.
there's still a potential for a negative impact.
Mm-hmm.
And it's not just about the direct tariffs that India faces, but also the way that those tariffs disrupt global pricing and trade flows.
Right.
There are concerns about what's called trade diversion. So if countries that are facing high U.S. tariffs on steel and aluminum
Yeah.
start trying to sell more of their products to other markets like India,
Mm-hmm.
it could increase competition for Indian producers and potentially lower prices.
So even if they're not directly hit by those U.S. tariffs, they could still feel the effects in a roundabout way.
Exactly.
What about India's huge service sector, particularly IT?
So for IT services, the immediate impact is likely to be neutral to slightly negative.
Okay.
Those services aren't directly subject to tariffs on goods.
Right.
However, if the U.S. economy slows down as a result of these trade tensions,
Yeah.
that could indirectly affect demand for Indian IT services.
Right.
And then there's also the issue of rising protectionism and potential visa restrictions, which could pose challenges down the road.
Mm-hmm.
But on the other hand, some analysts think that U.S. companies might actually increase outsourcing to India
Oh, interesting.
as a way to cut costs in this environment where tariffs are making things more expensive.
So kind of a mixed bag for IT. Wait and see what happens.
Yeah.
And finally, what about auto components?
There's a potential for a positive impact there
Okay.
as global companies look to shift their supply chains away from China
Yeah.
for assembly and parts manufacturing. India could be a good alternative.
Right.
However, this potential upside could be limited if global demand for automobiles falls because of all this trade tension.
Yeah, that makes sense.
So it's a complex picture there, too.
So it sounds like India isn't just sitting back and taking these tariffs.
No.
What kind of strategic responses are they considering?
Well, overall, India's approach has been pretty cautious and diplomatic,
Okay.
with the focus on trying to negotiate a broader trade deal with the U.S.
Right.
to create a more stable, long-term relationship.
And we've even heard that India might be willing to lower some of its own tariffs
Yeah.
on certain American imports to kind of grease the wheels of those negotiations.
Exactly. It's a balancing act, for sure.
And there's also the possibility of Indian companies setting up manufacturing in the U.S. directly to
Right.
get around those tariffs altogether.
Mm-hmm.
And then there's this broader push to diversify India's export markets so they're not so reliant on the U.S.
Yeah. That's a key part of their strategy.
And this kind of ties into that whole Madhur Parfara initiative, right?
Absolutely.
The push for greater self-reliance
Yep.
in manufacturing and the economy.
It's partly a response to this kind of global uncertainty.
Mm-hmm.
You know, they want to strengthen India's domestic capabilities
Right.
and be less dependent on global supply chains.
Let's go back to the Reserve Bank of India for a second. Beyond just adjusting their GDP forecast, what else did their statements tell us about how they're viewing this situation?
Well, the RBI Governor Malhotra actually used the phrase noisy trade war.
Oh, wow.
And he acknowledged its potential to slow down economic growth, both globally and in India.
Okay.
And what's really interesting is that even with all this global uncertainty,
Yeah.
the RBI decided to lower the policy repo rate by 25 basis points to 6%.
Okay.
And they shifted their monetary policy stance to be more accommodative.
So they're actively trying to support economic growth
Exactly.
despite these international trade issues.
Yeah, they're trying to provide a little bit of a boost.
But they did emphasize that their main focus for these policy decisions is still domestic inflation and growth.
Right. Those are still the primary drivers.
Okay. And the RBI also said that they're committed to making sure there's enough liquidity in the financial system to support economic activity and make sure their policy changes have the desired effect.
And they made another interesting point that India might actually be in a better position than some other countries
Oh,
because the reciprocal tariffs that it's facing from the U.S. are relatively lower.
okay.
And that's probably because India has a smaller trade surplus with the U.S. compared to some other big trading partners.
Right. So it's not getting hit quite as hard.
Yeah, it seems to have a bit of an advantage there.
So for our listeners who are trying to navigate this complex global economic environment,
Right.
what are some key investment strategies to keep in mind?
Yeah, that's the million-dollar question.
So first thing that pops into my head, something we hear all the time, is diversification.
Oh, absolutely.
Can't stress that enough.
Yeah, so think about spreading your investments across different asset classes.
Mm.
So not just stocks, but also bonds, maybe even things like gold or real estate.
Okay.
And then also consider geographical diversification.
Right.
So looking beyond just your own domestic market
Yeah.
to invest in countries and regions that might be less affected by these trade policies or that have strong internal growth drivers of their own.
Right.
And then within your stock portfolio, you want sectoral diversification.
Okay.
Balance your holdings across different industries because some are going to be negatively affected by tariffs, while others might be more resilient or even benefit.
Makes sense. Don't put all your eggs in one basket.
Exactly.
So what else should people be thinking about?
Well, focus on investing in fundamentally strong companies.
Sure.
Look for businesses that have healthy balance sheets, consistent profitability, manageable levels of debt, and importantly, some degree of pricing power.
Right.
Companies that have strong domestic demand within large and growing economies like India might offer more stability in the face of all this global uncertainty.
So prioritize quality and resilience.
Exactly.
Got it. What about the time frame for these investments?
It's usually wise to adopt a long-term investment horizon,
Okay.
especially when you're dealing with these big global economic shifts.
Right.
Try to avoid getting caught up in those short-term market swings that get triggered by headlines about tariffs or trade negotiations, and maybe consider a strategy like dollar cost averaging,
Okay.
where you invest a fixed amount of money at regular intervals, regardless of what the market is doing.
Takes the emotion out of it.
Exactly.
Anything else investors should keep in mind?
Well, stay informed and be adaptable.
Okay.
Keep an eye on how global trade policies are changing and be ready to adjust your strategy.
Right.
And you might want to consider looking at defensive sectors.
Yeah.
These are areas like consumer staples, healthcare utilities, because people tend to keep needing those goods and services no matter what the economy is doing.
Right. They're always in demand.
And then, as we talked about earlier, keep an eye out for potential opportunities that might come from those shifting global supply chains.
So to recap, for investors, diversify, broadly focus on strong companies, think long-term, stay informed, consider defensive sectors, and look for opportunities in those evolving supply chains.
Yeah, that's a good summary.
Solid strategies to navigate this kind of environment.
For sure.
Now let's zoom out and think about the bigger picture.
Okay.
What are the long-term implications of these tariffs for the global stage?
Well, one thing that's really important is that these tariffs represent a major shift in how globalization is playing out.
Okay.
And it could lead to a whole redrawing of global economic alliances.
You should say.
We might see a more fragmented global trade system emerge where countries are relying more on bilateral or regional trade agreements instead of those big multilateral deals. Yeah.
And the overall economic world order seems to be becoming more multipolar.
Right. It's not just a couple of big players calling all the shots anymore.
Exactly. And in this new landscape, a country like India, with its strong domestic demand, its growing tech capabilities, its relatively neutral geopolitical stance, and its increasing manufacturing depth,
Yeah.
could actually be in a stronger position over the long term.
And we're also seeing some distinct blocks of countries solidifying, right, like the alignment between China, Russia, and Iran,
Yeah.
which seems to be moving away from the traditional U.S.-led institutions.
Right. And then you have other regions like ASEAN, the European Union, and African nations that seem to be hedging their bets, trying to carefully balance their relationships between the U.S. and China.
Yeah, playing both sides a little bit.
And then you have the emergence of these new economic corridors being proposed, like China's Belt and Road Initiative versus that India, Middle East, Europe corridor.
So a whole new map of global trade is being drawn. Exactly. And it seems like that rivalry and competition between the U.S. and China is going to be a major force in shaping the global economic order for the foreseeable future.
Yeah, definitely. So for you, our listener, the tariffs put in place by the Trump administration are a really complex issue with all kinds of ripple effects. They're creating challenges and potential opportunities for India, and they're definitely reshaping the global trade landscape.
For sure.
While the immediate impact on India's overall GDP might be moderate.
Right.
Specific sectors are going to face some real challenges and will have to adapt.
Yep.
And for you as someone who's trying to understand how the world works,
right,
this whole situation really highlights how interconnected global economies are.
Totally.
And how important it is to pay attention to these big shifts in international policy.
Couldn't agree more.
And it leaves us with a final thought-provoking question for you.
Okay, I like it.
Given these big changes in global trade, how might individual consumers and businesses need to adapt,
Mm,
not just their investments, but also their patterns of consumption and production
yeah.
to thrive in this changing world? What new skills or knowledge might become really valuable?
Lots to think about.
Yes, some real food for thought.
For sure.
And we encourage you to go check out the sources that we talked about today. Keep up with those international trade negotiations and think about how these global shifts might affect you in ways you haven't even considered yet.
Yeah, great advice.
Thanks for joining us for this deep dive.
It's been a pleasure.